Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 11, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Stocks have ended this week decidedly on a sour note, and more downside is likely. I'll explain why. Junk debt is showing the same general thing, and it's really bad for stocks. Treasury bonds seem to be reversing, and this is showing a rise in fear. And the same goes for precious metals as they're surging. I think this is because of the inflationary fears and fears in general, despite strengthening dollar. We look at Bitcoin, and I think it could collapse, possibly to 30,000, possibly to zero. If you're a subscriber, then stay tuned. I'll send out separate video. We'll cover all of these various securities. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com and signing up for my indicators and the newsletter. All right, let's look at S&P 500. So first of all, we're looking at daily chart here. So generally speaking, I still think that the stock market is on a bull trend and an uptrend. The reason being is because stocks have closed above my blue support resistance line. So these lines here, these are mathematically generated lines. You can have them on your chart. Just sign up on my site. You can look in the description of where to find them. If we look back, go back to 2020, you can see we broke out above this blue support resistance line. So to me, this is all I need to know to say, okay, we are now in an uptrend. Until we close below this yellow support resistance line, you can see it right there. This happened on 9th of March 2020. Until that happens, I will consider stocks to be, until it happens, I consider this particular security, in this case is S&P 500, to be in an uptrend. So clearly this has not yet happened. Now we are experiencing pretty severe volatility, but overall I still think we're in an uptrend. So we'll see where this goes. It doesn't look great. Notice again how nicer sometimes the indicators call this price action. Today it actually touched it, bounced off of it. I still think that we're gonna see more downside before we see more upside. So we can look on the same security, S&P 500. Now we're looking at weekly charts. So you can see W here. Here it was D daily. So when I trade on daily chart, I keep my indicators at 250. But when we go to weekly, we change the indicators to 52 because there are 52 weeks in a year. So looking at this chart and just looking at this weekly candle, it looks really kind of bad. This weekly candle that we are seeing right there. So this is a classical shooting star candlestick. It has all of the bearish characteristics. So you have a big tail or big shadow at the top. In other words, price did come up during the week, but the bears sold it. Additionally, the open is above the close, so you can see it's a red candlestick. Previous week was the opposite. It opened at the close is above the open. So this is a very bearish candlestick. It's a classical shooting star candlestick. So on weekly chart, you can see it's still pretty bad. Now we are literally at support. So the blue line is marking support. Where is this gonna go? I have a feeling we're gonna break through, and we're most likely going to retest at least this January lows, maybe even lower. So I would not be surprised if we get to like 4100. You can see the same levels here at 4100 on daily charts. This is just from experience and from looking at various candlesticks and looking at various charts for many years. So it's not looking great. So for whatever reason, you can say that it was a Federal Reserve increasing the threatening to increase the interest rates. You can say it's because of the issues with Ukraine and Russia. You can say it, because of inflation, etc. But the fact of the matter is actually none of it makes any difference as long as you can just follow the technical picture. And this is purely technical picture because we're looking at candlesticks and support resistance lines. QQQ, the Nasdaq, is significantly weaker actually than S&P 500, so it got down as low as this red support resistance line here in January. You can see that S&P did not get that low, but Nasdaq did get that low. So definitely more volatile. You can see how nicely this resistance played out right there. I touched it on the 9th of February, came up to it on the 10th of February and collapsed today. So it's not a good sign at all. Most likely we're gonna get down to the red line, which is at 339 for Nasdaq QQQ. And just knowing this thing, again, we can kind of look at this distance here. So this pattern here, when the price came down, bounced, and it looks like it's gonna come down there again. So if that happens, I'm estimating we're gonna break below this red support resistance line. So this is actually quite bad. What that means is that we're gonna get down, quite likely we're gonna get down to this yellow line, which is at 316. Now if we get there, that is a really bad sign. That is a bear market. In other words, once it breaches this line, I will be considering the security, the Nasdaq, to be in a bear market. So it's not a good sign at all. In fact, small caps IWM already got there. So small caps actually breached this yellow support resistance line right there on 18th of January. In other words, we're now in an outright bear market for small caps, Russell 2000. Now, Russell 2000 constitutes, if I'm not mistaken, something like 15% of the general stock market by market cap. So it is not a huge part of the market, but nevertheless, it's important to look at it. Looking at the price section, notice how we bottomed here on 28th of January, came up, we touched right there yesterday, 10th of February, we touched this red support resistance line and bounced off of it. So this is proven resistance. In fact, if you were kind of like an aggressive trader, you could have shorted it right there. And if I'm correct, and Nasdaq and S&P will continue lower, then most likely this lows from January 28th will not hold for small caps. So this is something to keep in mind. In other words, small caps are already in a bear market, and some of the sectors of the large cap sectors are also in a bear market, like for example XLC. I just wanted to briefly show it to you. So there's the beginning of a bear market for XLC. This is big. This is things like Facebook, well, obviously 26th of January right there, and then big drop. So now we have a new low. Okay, so new lows are not good, obviously. So we are seeing some significant selling and potentially, more importantly, a change in psychology. So now, investors don't really want to think about buying. Investors want to think about unloading, and aggressive traders want to think about shorting. So if you are an aggressive investor, aggressive trader, that was your opportunity. So we'll see what happens again. Now, junk debt really was the big, warning as early as 24th of November. Right there, that was like the big warning to watch out for a potential reversal to the downside. Now we had the whipsaw right there on 27th of December. That's why I wasn't really terribly worried, but I got super worried right there on 18th of January. So 18th of January for junk debt, same goes for small caps. That's when things just started to unravel, and you can see how badly we unraveled once we broke down. Another new low for junk debt. So why do I give a hoot about junk debt? So I keep showing this chart. Now this is monthly, so each of those big candlesticks represent 1 month worth of activity. This is junk debt. Down here below you can see correlation coefficient. This is a correlation to S&P 500. By and large, generally speaking, correlations are high. In other words, if junk debt goes one way, S&P 500 follows, vice versa. We don't know which one goes first, or which one was the cause of this. We don't really care about the cause and effect. We just care about the price levels, you see. So this is important to understand. I'm a 100% technical trader. I don't really care about why. I only care about how and what. What am I trading? How am I trading it? So this is bad, and I see no reversal yet. I'm sure we're gonna bounce maybe a little bit. You can see we bounced a little bit here, into early February, but overall it didn't really help. So many reasons. Don't really worry about why again, but as they keep saying, the stock market can remain irrational much longer than you can remain solvent. So if your stop is hit, and let's say I was trading this thing and my stop was hit right there on 18th of January, I would be out. So I send this to my subscribers. Support broken, avoid 18th of January. Same goes for IWM. Support broken, avoid 18th of January. Why? Don't know, don't care. Just important to take action, basically. So overall, junk debt behaving badly. Small caps behaving badly. QQQ approaching caution levels again, and most likely will breach them unless something happens, like, I don't know, something really good. So we're looking at potential reversal for the entire market into a bear trend. Hasn't yet happened, especially with S&P 500. There's quite a bit of distance and quite a bit of things that could happen here, but I would be ready. I would have my finger over the sell button to just be ready. Looking at Treasury Bonds. So Treasury Bonds TLT, and you hear about all kinds of things about raising of interest rates, etc. So yes, by all means, Treasury bonds are under pressure because of that, and we are indeed shorting them. So you can see downward facing arrows. In fact, this is a successful trade right there. One alert was sent on 3rd of February, or another alert was sent on 18th of January. But our stop is up here at the blue line, so either one of those entries would have worked, and you got your target. So target was reached yesterday on 10th of February. At this point, what we do is we take our stop, which was up here at the blue support resistance line, and we move it to entry. We also take some profits. Now, looks like many people were doing the same thing and were taking profits. So today, this candle is actually quite bullish. This is exact opposite of what happened. You can see this is a shooting star candlestick with a tail out of the top and a red body, and means open is below, closes below the open. This is the exact opposite. We can see a tail out of the bottom, a green body. In other words, the open is below the close. This is a bullish candlestick. So looks like we're trying to bottom here. Additionally, this is potentially a bullish engulfing, or you can say that's outside reversal. So you can see that this red candlestick from the 10th of February is completely engulfed, or this is completely engulfed by the today's candlestick. It's not exactly a bullish engulfing, but you can say it's an outside reversal. So I would be on the lookout for this potential for a potential reversal here for TLT, for treasuries, especially the long dated ones. So it's possible that we're gonna rise a little bit. Right this instant, I still think the treasuries are in a downtrend. So if we do rise, if we get, let's say, something like that, we get to 141 or so, I would consider selling it short again. But additionally, from the intermarket perspective and from a little bit of a, I don't know what to tell you, like I don't really like to say fundamental analysis, but I can just say psychological analysis. You can say that this is fear. So treasury bonds are bought during the times of fear or stress. And, a war with Russia is a stressful event, obviously. Potential war with Russia, or potential just instability in Europe, is a very stressful event. So, yes, people are buying treasuries, or at least they started buying treasuries today, kind of as a protection against that, to just, see what happens. Because treasury bonds are basically the safest security in the world right this instant. So increasing fear, people sell stocks, people buy bonds during fear events. Moving on to dollar, here's DXY. So dollar, let's look on weekly charts, it's a little bit more clear there. So here's dollar. Dollar came down from the highs. Dollar is in an uptrend. I think it broke out here. This is a weekly chart, so we can see this is a breakout. You can see it clearly. You don't have to think. It broke out right there on the week of 19th of July. So you can just buy it and then, ride it higher. I thought we're gonna, continue lower, but today, this week was actually pretty decent week for the dollar, and it actually rose a little bit. So maybe we'll make a new high for the dollar. But here's the weird part. At the same time, looking at gold, so gold, look at daily chart for gold. Looking at gold, look at this big candlestick. This is a huge candlestick. Breakout occurred. This is the, I'm not saying this happens like I nail every single call. You can see there were a couple of, there was a breakout. I thought it was a breakout here in November 11th. No, that didn't work. We can see a breakdown here November 30th and then again in December 14th. But so we got two whipsaws in a row, but I think this is a true signal. In fact, we just got our target. So this is, if you bought it right around the blue line right there, this is the latest alert. Actually, was yesterday, 10th of February. You got your target today. So gold definitely got your target. So looks like gold is indeed an uptrend. Yes, we have bad inflation for whatever reason. I'm sure it's due to supply disruptions as well as trillions of dollars of newly minted money that came to the economy during the pandemic, acute pandemic phase. So yes, makes perfect sense from the fundamental perspective. How to protect against it? Buy gold. Okay, so people are buying gold because gold is basically kind of steady while dollar fluctuates. So XAU divided by USD. If dollar gets weaker, gold gets stronger. Same goes for GDX, gold miners. So up you know, we're shorting it basically. You can see downward facing arrows, but seems like it bottomed. So looking at weekly, look at the weekly chart, but you can see downward facing arrows, shorting and shorting it, but looks like we bottomed here for gold miners and gold. It is possible we're gonna make a rally. I'm gonna start a rally here for gold miners. So, you know, if gold goes up, gold miners will follow it. I would be thinking about buying gold and gold miners. And wrapping up with Bitcoin. So Bitcoin, I don't know. Some people think it's a store of value. To me, it's just a security to trade. And this is in fact we're doing it. We traded it. You know, if you have a margin account, we were shorting it. So here's one opportunity. In January, the successful trade. You know, you got your 20-some%, and then you take profits, move your stop to entry, then you got out here again selling it short. This is a signal right there, 10th of February. Signal is when we close below the red line. We come above it, we close below it. See how easy it is? That's why you just gotta get the indicators and stop thinking. So again, shorting Bitcoin, I'll be thinking about, you know, if we look at weekly chart, we can easily break below 35,000. If I'm correct, and like you can see this big pattern, I'm gonna draw it in. So something like that. This is the pattern. If we break below these levels, we can duplicate the same amount to the downside. This means we're basically gonna go to zero. It's like below zero. So I don't know. I just don't see Bitcoin as something worthwhile. But first, you know, small steps. So first step is 33,000 to the downside. Easily. Very easy. We can get down there. Alright, so you can see we have quite a bit of other securities to cover. So if you're not a subscriber, consider signing up by going to MasterChartsTrading.com. Click on products, sign up for one of the products. So I have 3 levels. One is trading indicators. These lines on the chart. You can use them on daily, weekly, monthly. You can also use them on, I don't know, 15 seconds. Here's 15-second chart of Bitcoin. So same principles apply. Short and close below the red line, right there. Like that, and there you got your target. Again, you can see Bitcoin is coming up. This is 15 seconds, remember. So again, we can see we're coming up towards the red line. We can sell it short there again. So now if we're trading on daily or lower, so this is a 15 second, that means it's lower than daily. Keep the length at 250. If you're trading on weekly, change the length to 52. If you're trading on monthly, change the length to 12. Very easy. You see how easy it is? Okay, so that's trading indicators. I also have the newsletter. So if you have my newsletter, I'm going to cover all of these stocks. Lots of stocks. Natural gas, Home Depot, some of the speculative stocks as well. You can see Liao, Auto-X, Peng. I don't know what they do. Holy Frontier. Goldfields, by the way, gold miners as well. We're going to cover lots of those. So that's a newsletter. Again, Ultimate Bundle, just get both of them, newsletters and trading indicators, at a steal $60 a month. I think it was well worth it, and you will pay, and it will pay for itself in, I don't know, 1, 2, 3 trades. Alright, that's it for this week's recap. Again, if you have any questions, let me know. Thanks for watching. Have another great trading week. Bye bye.